Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor. Really pleased to have with me Ronald-Peter Stöferle. He's with us now for the second time. I believe we've had him just one other time, but it's really great to have him. He's very well known for his work in gold. He is the managing partner and fund manager at Incrementum AG, which is based in Liechtenstein. I think Ronald, though, resides in Austria, and so I'm really pleased to have him with us today. Thanks for joining me, Ronald.
Thank you, Jay. Always good to be here.
It's always good to have you, and I want to ask you, I guess, before we go any further, how people can follow what you're doing. I know you're so well known for your In Gold We Trust report that comes out annually. If people want to track what you're doing, what's the best way?
Well, I'm quite active on Twitter. My handle is Ron Stöferle. So I just tweet out random thoughts, charts, questions. So I'm pretty active there. Then, of course, you can have a look at our webpage, incrementum.li, where we publish all our material, all our research. You can find information about our products in the wealth management and in the fund space. And then, of course, there is our webpage that is specifically dedicated to the In Gold We Trust report. It's ingoldwetrust.report, and you can download all 13 previous editions of the report there, but also the new one that will come out on 27th of May.
Oh, okay. Very soon then. All right. Excellent. All right. Well, before we get into today's topic, which is what is the future of the dollar system in gold, I want to get your thoughts on that. But before we get to that, how are things in Austria? Is it hard hit? Is it one of the, I don't know, I haven't followed it real closely, but, and you and your family, everybody okay as far as your personal friends and family goes?
Yeah, actually, all is okay over here, thank God. It is, of course, demanding, both from a personal point of view as a family father, but also, of course, from a business point of view, because there are so many unknowns. It is very demanding, but also for me, it's a big challenge, and I actually enjoy it. Navigating through the markets, communicating with our clients. So the situation over here is getting better. I think Austria managed it quite well, especially compared to our southern neighbor, Italy. Yeah. I think that was the big warning, and our politicians, I mean, they're often blamed and criticized, but I think they acted quite well. So actually now after Easter, everything is kind of loosening up now, and so far there have been roughly, I think, 300 death cases from the coronavirus. So I think we managed it quite well over here.
Okay. So the chances of going back to work, is your government making plans for that?
Kind of, yeah, but schools will start only in mid-May, and most of us are working from home now, which is not a big problem for me. But still, I think that that the big problem regarding Corona is now everything seems to be stabilizing and getting better, but when it comes to the actions taken, I listened to government officials from Singapore quite a lot, and they just said that the global health system is only as strong as its weakest link. So therefore, I think it would be naive to think that everything is going to be fine in a couple of weeks. Yeah. We will have to expect actions a bit similar to 9/11. I think it will definitely change our world, the way that we do business, the way that we travel. There are positive consequences, but also lots of negative consequences, of course, for our economies. I mean, I always said that after the Corona crisis, the debt crisis will reappear, and this is definitely a big concern for everybody now.
Yeah, absolutely. The economic fallout from all of this, of course. Before we get into those issues, one other thing I'd like to ask you about. We've seen this big disparity between the spot price and the futures prices in gold. This morning, for example, I was looking at the April futures at 17.75, about a $45 higher price than the spot. What do you make of that?
Well, I think it's mostly due to logistics. Talking to some people from the physical side, big traders, institutional investors, and other market analysts that I respect, it seems that the major problem at the moment is really logistics, moving the gold internationally. People tell me that in Asia, for example, there's a huge amount of gold, because actually gold demand especially in China is very, very weak. But it's really hard to ship that over to London, to Zurich, or to New York. On the other hand, in Switzerland, in Ticino, which is the Italian-speaking part of Switzerland, the biggest refineries are shut down, and they are responsible for roughly 60% of all investment products. So actually, there's a huge amount of big 400-ounce bars, but it's almost impossible to smelt them and to refine them and to make bigger, smaller, more retail products out of it. So I think it is mostly due to logistics, and we should not forget, normally those price discrepancies, they're basically used by arbitrageurs.
Sure.
But at the moment, it seems that many market makers, for example, they are by law not allowed to work from home. So actually, lots of the, let's say the technical setup when it comes to managing markets and to market making, it just doesn't work. So this arbitrage doesn't work either. And I think this is also one of the explanations that I have for those price discrepancies.
All right, so you don't buy the idea of some of the conspiracy folks that are suggesting that what's really going on here is a paper game, and the people that the exchanges simply don't have enough gold. It's just a matter of logistics. That if they can't pass along the physicals when the contracts expire, it's not that there's not enough gold in the world. It's just this physical handicap that's related to COVID-19.
Well, I would say that the answer is often easier than many of the proposed solutions. So from my point of view, the inventories, for example, are pretty high at the moment, and therefore I think it's really not logistics. The fact that there's a lack of gold, but we don't have the gold at the right place and in the right dimensions and the right size. I think this is primarily the problem that we're seeing.
All right. Well, okay, let's switching topics here. You passed along a quote to me from Nassim Taleb, our Black Swan guy, and he said, and I quote, "What you see is likely to be less Black Swanish than what you do not see," end of quote. What do you think he meant by that?
Well, many people say that the whole corona crisis is a black swan, but from my point of view, we might be using the wrong animal metaphor to describe the whole crisis. So actually what we're seeing, the black swan, which was coined by Nassim Taleb in 2001, it is applied to outliers like the 9/11 attacks. But the coronavirus was first reported by Chinese authorities to the World Health Organization, and since then it is always used as a black swan event. But Taleb just said there is no excuse for governments not to be prepared for something like this. Actually, Taleb, he was advising the government in Singapore, and they have been praised for their defensive and precautionary actions against COVID-19, because everybody said at some point we will see such a pandemic, because, all of the business traveling, a much more globalized world and so on. So from my point of view, the right description would be a so-called gray rhino. This describes a highly probable but neglected threat with an enormous impact. So I think it's important to say that what's going on at the moment, this is not the black swan, but the government actions. This is actually the black swan. The central bank intervention. This is a black swan. And Jay, for me, it's important. I'm not only from Austria, but I'm also a keen follower of the so-called Austrian School of Economics.
Yes.
And there are many things that are seen, but it's more interesting to see and to analyze the things that are not seen. It should not be forgotten, for example, that the suicide rate in the Great Depression was estimated to that it surged to 2%. So I think we should keep that in mind with all the measures that are taken at the moment. I think we will see much more people suffering from the economic consequences, from the whole fallout, from the depression, than from the disease, from the virus itself. And this is something that concerns me very, very much at the moment.
Yeah, indeed. The repercussions of the depression. I've heard the D word used for the first time, Ronald, and it's always been one of those things that mainstream people never talked about. The D word, depression. It's always a recession.
Yeah.
So what you're saying is the Fed is a black swan. What's happening? The Fed's operation. So what they're going to do is try to print money to fix this problem. It doesn't quite work, does it?
We'll see. But at the beginning, it seemed that it felt a bit like the Federal Reserve was bringing a knife to a gunfight. So when Powell actually did this emergency rate cut on a Sunday, and he lowered rates by 100 basis points, basically to zero, and the Fed, the S&P futures were down.
Yes,
were down, limit down. I said, okay, this is it. The emperor has no clothes. Since then, we have seen so many measures that were taken. We've seen this CPFF, commercial paper funding facility, PMCCF, TALF, SMCCF. Jay, the more acronyms used, the worse the crisis. So we're actually seeing unlimited QE. Just last week, the Fed printed $550 billion US dollars. Just to compare that, that's 5 times annual gold production, or 4.5 times the entire market cap of Bitcoin. But it's not only unprecedented monetary stimulus, it is also unprecedented fiscal stimulus. And we're seeing that fiscal policy and monetary policy are much more aligned this time. They are much more aggressive. There's a much closer cooperation between central banks and politicians. So from my point of view, the consequences will be quite significant. We're seeing that the gold price is hitting all-time highs in basically every currency. It will hit new all-time highs in US dollar terms probably in the next couple of weeks. So from my point of view, it's just a huge experiment that we're all part of. And honestly, I've got no idea if it's going to work out this time. But of course, it is compared to 2008, 2009. The GFC looks like a kindergarten crisis now, because now this is really a demand shock. It is a supply shock. We had an oil shock. We had a dollar shock. It is a wealth shock. And actually, central bankers, they are running out of tools. So they really have to get the bazookas out and go all in. And so far, markets are cheering, but I think this is just a dead cat bounce.
You just have to think so, because once the reality of this economic demise starts to register, and once these companies start to show, I would guess a lot of the sectors anyway, massive losses in their first quarter reports. At the same time, I think a lot of the gold mining companies should do fairly well, although COVID-19 is going to shut things down and deter them more perhaps in the second quarter than the first. But what are your thoughts about the gold mining shares? And then I'd like to ask you, do you think what about the dollar? Can the dollar survive as the world's reserve currency after this crisis?
Well, when it comes to the miners, I think if we have a look at the charts of Newmont or Barrick and follow the volume that is traded in these two stocks, I mean, it's obvious that there's really big money coming in. So it seems that generalists are now moving into the gold mining space. And of course, if they start allocating capital, they start with the big names, and then they go down to the smaller capitalizations. I think that the earnings outlook for the gold sector this year is fantastic, while for the rest, for basically every other sector, it's extremely, let's say, blurry. Nobody really knows how business for the airline industry, for restaurants, for technology companies will develop. But what we know is that for the mining space, first of all, the gold prices are significantly higher than last year. Oil prices are significantly lower, and they are the biggest cost driver. And we know that the whole sector is extremely underowned. So I think that the mining space will be in the spotlight again. We always said that we had, Schumpeter would have said, creative destruction happening in the market. So actually, I think this is really a sweet spot for the mining space at the moment.
Right. And with respect to how do you think this thing will play out now? We have a global contraction, I guess. I think it's fair to say that. Do you agree? Globally, China, all the big countries will basically be having in a recession, including, I mean, if you can believe China's statistics, I don't know, but are we in for a global recession? I guess that's the question.
Yes.
And then how does that play out into a deflationary environment followed by an inflation, or how do you think?
Well, I think it's crystal clear that the whole world is in a recession, and don't get me wrong, a recession is something normal within a cycle. Of course, this time it's extreme, and it's important to distinguish and to see what makes a depression different than a recession. The depression ushers in many years of secular change in behavior. So recessions don't normally, and this is manifest in the approach taken mostly by households. So normally you see that savings rates go up significantly. During the Great Depression, savings rates went from basically zero to as high as 28%, long after real GDP bottomed. So if we see that savings rate going up significantly, we can say, okay, this is really changing the behavior and the market sentiment of people. From my point of view, I think it creates enormous opportunities. I think that for now, the deflationary pressure was really fought by central banks. And I think that inflation is clearly on the horizon. Jay, we should not forget, once we go back to normal life, this money that has been printed, it will still be around. So once velocity picks up, I think there will be enormous inflation pressure, and actually our proprietary inflation signal just moved to a long inflation signal. So we are playing offense now in the commodity space, in the mining space, commodity currencies. This is what we're seeing now, and actually inflation is probably the biggest pain trade on the market at the moment. And from my point of view, something like stagflation might really be an environment that we should prepare for the next couple of years.
Well, not a happy time. I'm old enough to remember the stagflation of the late 1970s. You're not, Ronald, but I was a young man then, and that wasn't fun. But I can imagine that what we have coming could be a magnitude worse. I hope not. I hope I'm wrong. So I guess it's gold and gold shares, and you say commodities in general, I guess longer term, right?
Yes, commodities are probably the most hated asset class. And, with all those fiscal stimulus, infrastructure programs and so on, I really got a hard time expecting copper and most other commodities not doing really well. All
right, we'll have to leave it go at that. Ronald, thank you so much for being with us today and sharing your thoughts. very important subject matter, and I hope we can keep up with you and in Gold We Trust as well. Perhaps have you back on after the next edition of that comes out. Thank you so much for being with us.
Absolutely. Thank you very much, Jay.